How much cash have you got in your wallet right now? You don't have to get up and go and find it. That'll just be distracting. But think about it for a moment. I couldn't tell you how much is in my wallet, but it's not very much. And more, like many other South Africans, I find that I'm swiping a credit card or swiping a debit card because bank charges have come more in line with packages and enabling you to have a number of what they call free swipes or included swipes every single month. There have also been changes, though, to recent interchange fees between the banks, which ultimately makes it cheaper to use cards rather than cash. What are the implications of that, not only for the way in which we spend our money, but ultimately for the profitability of the banks themselves? Richard Ketley is a director at Genesis Analytics. I beg your pardon, Richard. It's nice to have you with us this evening. When we talk about bank interchange, give me a sense, please, as to what exactly we're talking about.
Right, good evening, Bruce. Good to be here. So payments are what we call a network industry, which means that for the whole system to work, we have to have various things come together. We have to have merchants who want to accept the payment instrument we use. We have to have all the kind of pipes that connect us between the banks and to the consumers. So in a complex industry like this, we can't have every individual merchant and every individual consumer and every individual bank negotiating rates. So the interchange rates are the rates that the banks agree to govern payments in different payment streams. And I think why we're talking this evening is that the Reserve Bank has just announced the new regime that would cover the payment of interchange on credit cards and debit cards in South Africa.
Now, how significant is this change in the interchange fees? We've seen the huge impact that the reduction in interchange has had on the cell phone companies, for example, when it comes to switching from network to network. That's had a huge impact on cell phone company and telecom profitability. What's this going to do to the banking sector?
It will have an impact clearly on the banking sector, but as always, it won't affect everyone equally. So the regulations will affect both debit and credit cards differently, and most importantly, the new regulations do not make provision for the charging of interchange on so-called hybrid cards. So the banks that have issued hybrid cards are the ones that will lose the most from this change in interchange rates. But the actual reduction.
So your FNB and you've white labeled the Discovery credit card, for example. You're prejudiced in this particular interchange story.
It depends whether you have a credit card or a so-called hybrid card. Credit cards, the interchange will reduce from about 1.7% to about 1.50%. Debit cards go from about 0.55 to about 0.48. But it's the hybrid cards which currently sit between those that face the biggest change. So if they will be treated as debit cards going forward, the issuers of those cards will face the greatest impact on their revenues.
What happens to the likes of diners and American Express, who are notoriously adventurous in the way they charge merchants to use their cards?
Well, technically, the jargon in the industry describes what they called a four-party or three-party model. And in a four-party model, you have an agreement between two different banks or many different banks, one that's the issuer and one's the acquirer. And interchange occurs when you have a difference between the issuer and the acquirer. In the context of diners or American Express, which are three-party models where the same bank issues and acquires, they are not brought within the same jurisdiction in terms of interchange. However, what we have seen in other countries, in America in particular, the regulators have not allowed the three-party models to be ignored in the process of regulatory reform. So at the moment, the way the regulations are issued in South Africa, it would look as if the three-party models are not affected, but whether that remains the case is up to the regulator.
Will you and I, as users of these cards, debit cards and credit cards, actually see any change whatsoever in the cost of our banking?
No. The reason why regulators have globally taken an interest in interchange is their feeling that interchange prejudices merchants. So by determining an interchange rate, it puts a floor below the level at which a bank may compete to acquire the business of a specific merchant. So when you or I swipe our card, that merchant will pay to the bank anything between 2 and 5% for your right to use a card. And this, to some merchants, feels inherently unfair. It's your choice to use your card, and yet they are paying you for the benefit. And in fact, some of that benefit comes through to you in terms of the loyalty points you may receive on your credit card. So you as a customer benefit from that level of interchange that exists in the market, and it's the merchant who ends up paying that. So going forward, the merchant will potentially be able to negotiate more aggressively with the bank in terms of how much they pay in their merchant service charge. But whether that benefits the consumer is a moot point. In Australia, where these charges were regulated and reduced several years ago, what we found was that the merchants did in fact negotiate lower rates with the banks, but they did not pass their lower costs on to consumers as far as we can see, and consumers didn't benefit because they ended up paying the banks back in different ways, either through receiving less loyalty points or through a greater level of fees on the bank account. So the effect of the reform was not necessarily, as far as we can see, to benefit consumers, but in fact to the benefit of merchants. So the economics shifted from the consumer to the merchant.
The obvious question then is, so what is the point of going through all of this?
Well, I think that's a very important question. The point which I think most people can agree on is that we need to move societies into a position where we use less cash. Cash carries the risk of crime, as we all know in South Africa. Cash enables people to conceal their income, which is bad for tax collection. Cash is used by people who are laundering money. So the end game in payments is really to reduce the use of cash. And so the question we need to ask ourselves is, do these changes actually drive South Africa forwards into the so-called cashless society? And in some ways, the way interchange has worked historically has encouraged the use of cards, because people have been encouraged to use their card in order to get air miles and things like that. So it may, to some extent, if there's less value to the consumer, retard their use of cards. However, you could also argue that the use of cards is so entrenched that we don't need to reward consumers as much as we used to, and therefore this will simply be will bring a benefit to the merchant and will impact the bank's revenues, but will not have any detrimental effect on the way consumers behave and use their cards.
I mean, typically so much reform ultimately prejudices the people it's designed to help most, which is the poor. Do you see the poor coming off second best as a result of this? No bank's going to give you a credit or a debit card. You're obliged to use cash. It's expensive to draw. It's risky to carry. Does this benefit you in any way whatsoever?
Well, I think I think the regulators in South Africa have done a reasonably good job. So the reduction in debit card interchange, which is the cards that are most often carried by the poor, has been relatively modest. So if there had been a major reduction in the interchange on debit cards, then you could see a situation where the banks try and recover the profitability on those products by increasing other fees that would affect the willingness of people to use their cards. And so I think the change, although any reduction in fees is not welcomed by the banks, should not have a major impact on people's the poor's use or access to debit cards. I think the major challenge is, how do we get people to use their debit cards more and not use their ATMs and draw the cash and carry it across the street and use it at the supermarket when they could be using the debit card that is in their pocket.
And that's the great big challenge, isn't it? Does this take us a step closer toward the so-called cashless society, the thing that is ultimately going to upset car cards?
I don't think so. I think by reducing the incentive or the amount of money to incentivize customers to use their cards, we are certainly not moving us any closer to a cashless society. It could be argued that merchants will become more willing to accept cards because they pay less. So they could have some positive effect on the what we call the acquiring side, but certainly on the issuing side to the consumer, it won't really have that much of an impact.
That's in the here and now. You would have seen, and I'm sure everyone else has seen, if you go to a coffee shop nowadays, there'll be a Standard Bank logo and it'll say take a picture and do snap scan, and there's an app you can use on your smartphone. Apple Pay is coming to market as well in a very aggressive way. The world of payments worldwide, yes, it's tied into the Visas and MasterCards of the world, but it's changing fundamentally, and that's got to be positive as a move, and it's probably more significant as a move towards us going more cashless.
It's changing in some ways, but in some ways it's remaining very much the same. So I think the big change we've seen with Apple Pay and Samsung Pay coming to the market is the fact that although there were large groupings, industrial groupings, thinking of alternatives to using essentially the infrastructure of the card associations, both of these products and these major innovations are built on what we'd call the card rails. So what we're seeing is, in fact, cards becoming more entrenched in the payments environment going forward than they were in the past. What we also see, I think, are a whole range of innovations. You mentioned the SnapScan innovation, which is trying to reduce the cost and the risk to the merchant, which is associated, I think, more with the hardware side of the business. Obviously, if you are scanning a QR code at a merchant, that merchant no longer has to invest in a point of sale device, and you get your message from your confirmation as a text message. So all of these are very helpful innovations to get down the cost of acquiring and potentially to encourage more merchants to acquire card transactions. And obviously,
but it's also about acceptance, isn't it, of these various payments, the mechanisms that are available. There could be 1,000 different mechanisms, and we really need to whittle those down to a couple to give them scale.
Absolutely. If you talk to any of the large retailers, they will always tell you, we are here to sell goods. We will accept whatever means of payment the customer would like to use. However, from a systems process perspective, we really can't handle more than 3 or 4 types of payment. And this has been one of the major challenges that I think payments innovators have found, is they cannot lightly get retailers to make the investment to accept new types of payment instruments. And so whatever innovation we have in payments, you have to deal with thousands, if not millions of merchants. And this becomes one of the major issues in terms of adopting new approaches to payments.
Richard Ketley, thank you so much. He's the director at Genesis Analytics, joining us this evening here on CNBC Africa. Thanks for your insights this evening. The fascinating world of payments and the evolution of payments, and of course, ultimately the cost to you and me of the ability and the convenience of being able to swipe a card in Moscow, get the payment made, and get an SMS on your phone to confirm that it's gone through, with the translation, the currency translation as well. It's a magical world. It's an expensive world to operate, but ultimately, all of us want those costs to come down. Richard Ketley, thank you very much for joining us. There'll be more tonight, tomorrow. Till then, bye-bye.